Hey traders, Raghee here, and in this free recap video I'm going to talk about a few markets that are going to have my attention early next week as we kick off the last two trading days of July and head into the month of August. Still really kind of heading into probably some of the more summer doldrum type months. I mean, the first 2 weeks of August can be pretty thin by way of attention and participation, but I would also think that with non-farm payroll, we could see still a little bit of attention coming into next week as we roll into July, or I'm sorry, from July into August, and looking at that non-farm payroll next Friday. Now, one of the things that has my attention is Apple. This chart that I had here from the get, and Apple has pulled back today. We had a pretty significant meltdown in the NAS, and I'll talk about the depth of that in a moment. But we have a pretty significant correction here, and I say significant because the clarity of this has my attention. We have plenty of green grab candles here, and at least 5 propulsion dots. We have way more than 5 propulsion dots, and that, even though we're kind of slowly meandering higher, this does have the structure of a markup or an uptrend. Markup was the terminology that Charles Dow used. Nothing like kicking it old school, but I do like the structure we have here. And here Apple is pulling back right in front of earnings. And let me show you a site that I like using a lot in front of earnings. And this is started by a buddy of mine that I knew back from when I was a fairly active contributor at another site called StockTwits, which is kind of like Twitter for traders. It's a neat service. And he started this company called Estimize, which is, imagine getting crowd-sourced rev and EPS estimates for earnings. It's a very neat concept, and I like this a lot. It's not just for earnings, but you can even do it for economic data. And I'll be talking more and more about, you know, these economic forecasts, and it's a very cool service. Apple is on my radar because obviously we've got that coming up, as you can see here, on the 31st, last trading day of the month. And what I like to do is look at the way in which the Wall Street consensus and the Estimize numbers sort of lead up into what I feel the overall opinion is about the stock going into earnings. Now, this was not a great example of a stock with a good run up into earnings, not the kind of structure that I like. And we'll be talking more about that in the webinars, member webinars, probably the next week or two, as we prepare for the next earnings. And you might say, Rog, next earnings, we're not even done with the current earnings. Well, I like to start the research about 4 weeks out. So by the time we get into the first week of September, we're going to start to do some research for the upcoming season, or at least for the earnings that we're going to see in early October. All right. So the sell-off here in Apple is really interesting because it gives us a correction inside what would be that 48-hour window before the volatility of the earnings release. And typically, if I have a better quality uptrend, I will look to buy at the money calls in an environment like this. But the structure here is not awesome. It's not something that I'd like, but it does set up just an honest-to-goodness potential buy for Apple. Earnings just kind of gives it an extra volatility concern for me. But that pullback is one that I will watch on Monday. So watch the recap video on Monday, because if I do something with Apple going into Tuesday, I'll let you know on Monday. So check out the recap video then. Now, one name related, I mean, obviously Apple's the heaviest weighted name within the NAS. This is a really interesting pullback to me. Now, first of all, the typical price movement range for the NAS is about 170 points. That's the high end of the typical price movement range. And we went over 200 on this one. So the market, I don't believe in efficient market theory. And I don't believe the market knows everything. And I think when the market has to digest something it did not know, has not prepared for, we get a candle like we got today, right? So I think there's a lot of justification for saying efficient market theory doesn't pan out when you see moves like this. And this move, though, I think is a terrific pullback into the correction of the wave. Again, very nice propulsion dots, consistent green grab candles. This is not the end of an uptrend, gang. This is a correction. The end of the uptrend for me would be 100 points below where we are now. So I'm still quite bullish on the NASDAQ. And if I'm bullish on the NASDAQ, looking at this as the tide and these stocks as the boat, I am looking for where certain names might have, because the tide went out, be correcting in their own right. Microsoft comes to mind. Apple comes to mind. Even almost Amazon. Amazon would have to be another 40 to 50 points lower than it is now, but there are quite a few names that are at interesting levels where they sit. Okay, so a few things about next week. Again, non-farm payroll coming up, and I also want everyone to be aware that we've got Caterpillar earnings on Monday, Apple on Tuesday, and if you're not programming those heavily weighted names into something like Estimize or whatever you prefer to use, please remember that this time of year, the boats, the smaller names within these larger indexes, it's like the tail can wag the dog. Don't underestimate the impact. I think a lot of people saw the impact of Facebook on the NASDAQ and Netflix on the NASDAQ. Don't underestimate these names and the impact they can have on the index. So lots of moving parts during this time of year, but that's what makes it so much fun. Everyone have a terrific weekend, and I'll see you next week.